Hello everyone, my name is Rahim Masum Raja and you are watching market updates and the market Smith portfolio review as well. In this video, I will be sharing a quick recap of how the market performed over the past week, all along with the key takeaway from the last two trading sessions. I will also walk you through the recent action that we have taken in our model portfolio and highlight the trends and the stocks we are closely monitoring in the upcoming days. Our objective is to keep the insight simple, clear, and actionable, making it easier for both seasoned investors and beginners to understand what markets what matters most this week. So let's dive in. So this is the daily chart of Nifty 50, and as we can see that this is not reflecting the price action of yesterday. So I would like to share you the screen, another screen of trading views, so that we can see it here nicely. So yesterday's session has been great for the index, and index has actually opened gap up, and the main reason was because the US government has paused the reciprocal tariff for 90 days, and that has been taken well by the investors, and it has boosted the market sentiment as well, because we have seen that when the reciprocal tariff has been implemented, we have seen this volatility in the market from the past 2 to 3 weeks, and then again yesterday it has actually lifted the investor sentiment. So currently the index is trading around 22,950. That is where 50 DMA is also placed, and it got resistance is in that level as well. So let's see whether this buying momentum continues in upcoming days or not, because again on Monday market is closed, so we'll have to monitor it on the Tuesday, and we'll see that whether the index is trying to reclaim its 50 DMA, because 50 DMA and 22 21 DMA is placed nearby, or we can say it has to reclaim simultaneously if it is trying to move towards upside. So it is a matter of time. So let's see how the market will behave. So again, I will try to shift my screen to the market Smith screen. So, as in this environment, we are watching some of the stocks very closely, like Vadilal Industries. If you look at the chart, the index has actually broken out, but we are in the downtrend and market was so volatile. So, we have avoided adding the stocks, and it is extended to 12% from the pivot level in just 2 weeks. So, let's see how this index, how these stocks behave, and whether it is forming a new base again or not. If you look at another stock like HDFC Bank, so HDFC Bank is also showing resilience, and it is showing it is also forming cup with handle pattern, and it has also reclaimed its all key moving averages, and it is 2% to the pivot only. So if this breakout happens, then obviously we'll think whether we should add it on portfolio or not, because volume spike is also good. Yesterday on Friday actually it has volume was with above average volume. So these are the stocks that we are watching closely, and there are many more stocks. We cannot show all the stocks in this video because video will become very lengthy in that case. And now I will also try to update regarding market Smith India updates. So Indian market has shifted from downtrend to rally attempt on Friday, as Nifty held above the recent low of 21,744 for 3 sessions. A follow-through day is now expected when a new high is needed to confirm an uptrend, or index gained 1.7% with higher volume than yesterday. Obviously, will move the market status to confirm uptrend. And on the flip side, if Nifty breaches its 21,744 level, then we'll again revert back to downtrend. So last week we have added one stock from FMCG sectors, cosmetic, personal care, we can say, and remove one stock from steel producers because of technical weakness and some issues in that stocks. We have also written in our removal note. So as of now, we are holding 12 stocks in our market Smith portfolio. Now, as I always used to tell that we used to send like O'Neill market overview every day, and in this O'Neill market overview, you can have the fast snapshot of global market, major indices, sectoral trends, and O'Neill industry group analysis, plus key sectors on our radar. So if you scroll it down, we can see all those things like global market overview, measures market indices and sectoral directions, snapshot of the sectors, how the sectors are trying to move and improving, and also the stocks that we are watching very closely in and which is actually in our radar. So this is about the O'Neill market view that we are sending it. So in this, if you look at some of the stocks from this section, then we can just pick one stock like Britannia. We can also pick BDL. We can pick some of the stocks, or you can also try of your own. So Britannia is showing resilience, and from past 1 month, the stock has tried to move upside gradually, and it has also reclaimed its 200 DMA, which is also acting as a resistance, as I can see it here. So let's see whether it is holding and trying to move above that or not. It is a matter of time, and we need to monitor it very closely. So the next stock is BDL. So BDL is also forming like cup based pattern, and it has given the gap up opening on April 11, that is on Friday, on yesterday, and then index has gained around 3% in a single intraday, and it has also reclaimed its 200 DMA with volume near its average volume. So if you look at the Godrej Agrovet, also it is trying to show resilience. The volume is like above average volume. We can see it here, and then it is actually trying to move upside and reclaim its 200 DMA. So these are the stocks like Bharat Dynamics I have already mentioned, Mitani I mentioned. Okay. So and one more thing I would like to update you. Like the yesterday we have released one report on FMCG sectors. FMCG climbed on defensive demands amid market volatility. And we have also mentioned some of the stocks that we are monitoring it very closely. Once you read the article, you will get very good insight about the FMCG sectors and how the FMCG sector poised for upside and breakout signal strengthened amid market volatility. So in this market, what are the things that needs to be taken care, like the market is incorrectly in the rally attempt, and once confirmed uptrend is established, it presents the most favorable environment for equity investors. Historically, if you'll see, this phase offers the highest probability of generating strong returns, as broader market strength often lifts quality stocks higher. In these evolving market scenarios, we recommend the following approach to the investors. The first rule is like we have to be very disciplined. So maintaining discipline and adherence to your well defined plan should be the first priority. The second one is prioritize leading stocks that are outperforming the broader market, particularly those with strong resilient sectors. Okay, I have mentioned that what are the stock that we are looking at, and also from this O'Neill market view, you can also shortlist your stock, and you can just take it in your watch list. Okay, so this is like the second recommendation from our side. The third one is avoid chasing extended stocks, like I mentioned it, like Vadila Industries, which is just 12%, and instead wait for technically sound entry points and proper chart setup. And the last but not least is exercise patience. A thoughtful and measured approach often leads to better outcome in such conditions. So that's a wrap for this market updates. If you found this helpful, please don't forget to like, share, and subscribe for more market insight. Stay disciplined, stick to your strategy, and trade wisely. See you next time. So thank you so much for watching the video.